Hey YouTube, Tactical Timmy here. I wanted to talk about dollar cost averaging because it's such a fundamental investing concept. Whether or not we're investing in silver or gold or even stocks, we need to make sure that we know what dollar cost averaging is and what its advantage is for us. So let's start off with what dollar cost averaging is. Dollar cost averaging is when we take the same amount of money each month and we invest it into a given asset class, or we invest it into a given split of different asset classes. So maybe you take $100, you break off and you spend a given amount on silver, a given amount on gold, and a given amount on stocks. And you're going to stay consistent. The key to dollar cost averaging is you have to pick an amount that is going to be consistent. I can't go changing the fact that I buy more silver at one point and less silver in the future. I have to make sure that I am keeping it consistent. If I have $100 to spend on silver, I need to make sure that I'm investing $100 in silver. If I have $200 to spend in gold, I need to make sure I'm investing $200 in gold. What is the benefit of actually doing this? It's going to reduce volatility. So volatility is when the price of assets tends to bounce up and down. We don't know, as humans, it's very difficult for us to tell whether or not it's going up or whether or not it's going down. So what dollar cost averaging does, and buying that same amount every month, no matter what the price is, what that will do is it'll actually give us an average of what the price is for the asset. It's not gonna be, we're not gonna always buy it on the highs or always buy it on the lows. We're gonna end up taking, sometimes we'll buy it high, sometimes we'll buy it low, but in the end, it will end up being the average of the prices. So we have some benefits. The benefits is it does reduce that volatility. We're not having to try and time the market because, like I said, we're not good at trying to time the market. Buying that fixed amount each period can be really, really good for us. It forces us to stay on task. It's really easy when it comes to silver and gold. It's really easy to get wrapped up and see something really beautiful and buy more of it. It'll keep us more focused on the more investing side, and it will keep us from actually collecting random bits and bobs that aren't necessarily going to be easy for us to sell in the future. I know that when I started off my investments, I tended to get more and more sidetracked about things, and I didn't think about how I was going to be selling these things in the future. And that's something that you need to make sure that you're aware of and you know how you're going to actually be able to sell these things in the future. Dollar cost averaging also has the natural benefit of it's going to be how we naturally invest in things. We are not going to have lump sums a lot of times in life. Now, this strategy also does work with a lump sum, but most of the time in life, we're not getting a huge inheritance. We're going to be slowly gaining our money as we work. And as we work, we're going to invest the same amount each month, depending on what our budget is. And as we invest, we'll end up taking the average of the price. No matter if the price is going up or down, we're still going to get the average of that price. If you do have that lump sum, you can use this strategy to actually space out your purchases and do the same idea where I buy a little bit on one period, a little bit more in the next period, and a little bit more in the final period. And how long that period is gonna kind of depend on what your time frame is, how long you're gonna be investing into that asset. It's going to depend, and different time periods are going to be right for different things, and it's really difficult for us to predict what time period is going to be right for you. Sometimes you might want to do it on a monthly basis. If it's a very short amount of time that you're going to be investing into something, maybe it should be a daily or even weekly basis that you're going to do. I would only recommend doing that if it comes to a digital asset that you're going to be investing in. You're obviously not going to be doing a daily dollar cost average when it comes to silver or physical or even physical gold, because that would just kill you in terms of the premiums. But it is something that you should be aware of, that you can actually vary the periods given different circumstances. One circumstance that I would strongly recommend all of you take into account is your different states' laws when it comes to sales tax. It does not behoove me in my state to actually go out and dollar cost average. Even if I say have $100 to invest each month, it doesn't behoove me to go out and invest that $100 each month, because if I did, that wouldn't be enough to avoid my state's sales tax. I actually need to wait and save up a few months before I can actually go out and make a purchase without paying sales tax. There are other states where you don't have to take this into account, because you can go out and buy any sovereign coins or American Eagle coins, depending on where you are, and not have to worry about that sales tax implication. Taking that into account, everyone's situation is going to be different. Some people, if you live in California, I believe that their sales tax is so high, you have to spend $1,000 on gold and silver before they will actually take off that sales tax. I think it's 1,000 or 2,000 actually, that before they will avoid the sales tax. So in that case, your dollar cost averaging period is probably only going to be once a year. And whether or not it's best to just invest every year at the beginning of the year, or whether or not you should invest in summer, there are some cyclical patterns. If you are in one of those states where you're having to save up a significant amount more, maybe then it is beneficial for you to actually look and see about timing the market maybe slightly. But like I talked about before, we are notoriously bad when it comes to timing the market. It's going to be very difficult for us to know whether or not these assets are priced low or priced high, because we can't predict what's going to happen in the future. We've talked about this before on this channel, where we've talked about how bad we are at making predictions, and how that there are hedge funds out there where it's their full-time job to make these predictions, and they still aren't able to get it right sometimes. And that's with all kinds of access to data that we don't have access to as the average gold and silver investor. What are some of the drawbacks of actually doing this gold and silver investing, or even stock investing, with dollar cost averaging as a strategy? Well, we do have to be more patient, because with gold and silver investing, it's easy to get impatient and want to go out and make those frequent purchases. But like many things in life, it's more beneficial for us to actually be patient and slowly invest into things. Another thing that it does force you to do is it does force you to stay a little more between the rails and a little more focused on what's most important to you. It's not going to allow you to go out and buy the little things that you want to. You'll have to plan more ahead of time. The last thing I wanted to talk about was the fact that dollar cost averaging sometimes will actually end up causing you to pay higher prices. But like we talked about before, we're really bad at predicting when those high prices are and when those low prices are. So we have to take that into account, that we're gonna get the average most of the time. And we have to be okay with that. And if that's not something, and you're okay with trying to time the market, and you want to try and squeeze every little last cent out of your investment dollars, then yes, you should spend as much time as you can trying to time the market. But you have to know that there are hedge funds out there, and there are lots and lots of people trying to time that market, and a lot of people get it wrong. There's no guarantee that just because you spend time, it means that you're going to get it right. I wanted to send a quick shout out to Dylan, who did give me the idea of going ahead and doing an in-depth look at what dollar cost averaging is. If you liked this video, or if you have any other suggestions for this video, please feel free to leave a like down below and a comment with any suggestions about future videos you'd love to see.